Okay, we're going to switch gears to makeO, which is the parent company of dental tech startup Toothsi and Skinnsi, which recently raised $16 million in a funding round that was led by 361 Asset and others. This capital, it says, will be used to support its plans to expand its geographic footprint and scale the experience centers. So joining me now to tell us more about all of this is orthodontist turned entrepreneur Dr. R.P. Mehta, the founder and CEO of makeO. R.P., thanks very much for your time here on CNBC-TV18. It's a 5-year-old company now. Tell us about the growth that you've seen so far and how large your customer base has grown to.
Sure. Thank you for having me here. So at makeO, we're essentially a clinical makeover platform. We're focused on providing smile and skincare solutions to users. In the smile category, we offer invisible aligners. That's the invisible alternative to braces to customers using a vertically integrated full stack platform. Across the skin segments, we offer a range of cosmetic derma treatments to consumers that can span from hair removal to acne to anti-aging as well as facials. On the growth side, over this journey, we would have started from say 4 customers a month. We are now delivering treatments to more than 40,000 customers spanning across the skin and the smile segments annually. We gross an annual revenue number of about 250 crores approximately. To give you a sense of the scale, we do about 1 lakh consultations both at home and at our experience centers via our doctors. Yeah, that's largely about the growth. We've grown to almost 7 core cities of India and ship our products to approximately 100 cities of India.
Well, thanks for summarizing that for us, RP. But, this round that you raised of $16 million, how are you going to deploy this? How many experience centers are you looking to add? And where else are you looking to expand your presence?
Sure. So we right now have about 25 experience centers across the top 6 cities of India that we operate in. We look to expanding this number to at least 40 centers across all of the cities of India that we operate in. The experience centers essentially offer customers access to treatments and consultations by expert doctors in-house. So it gives us a more robust offline presence as well. And geographically, we will also expand into the next leg of 30 cities in India where we will deepen our presence by tying up with more doctors, doing further trainings, setting up home scan services in the cities that are not present, and so on.
So what will that mean in terms of your growth going ahead? With you expanding your presence, what sort of jump are you expecting in revenues?
So we are, like I said, at about 230 crore annualized revenue run rate right now. We deliver close to 3,000 treatments to consumers annually. We intend to get this number to about a 500 crore annualized revenue run rate in the next 2.5 years. At the same time, we're also focused on efficiency and profitability. So in a 16 to 17 month time frame, we intend to also get to an EBITDA break even.
So, RP, speaking of profitability, you had a loss of about 180 odd crores in FY22. What's FY23 going to look like?
So FY23, the losses would have actually reduced by more than half from the FY22 numbers. So we spent the first 2 years really cracking product market fit and scaling up exponentially. The last 1.5 years for us was about consolidating business, getting in more efficiency in the business, and so on, which we did fairly successfully. And now with this capital that we have, the next 2 years for us looks to be all about sustainable and profitable growth from here on.
Well, we hope that's the case. A final question, RP. You outlined your various revenue streams, but are you looking to add to this? And what do you expect will be the fastest or the biggest growth drivers for you going ahead?
Sure. So in terms of growth drivers, I think geographical expansion into the tier 2, tier 3 cities of India is definitely going to be one of the larger growth drivers for us. Secondly, we are one of the very few aligner platforms in the country that has a US FDA certified lab, which has actually managed to get a patent in the invisible aligner appliances to be offered to teenage users. So we do foresee now being able to provide our smile correction products to a large segment of adults as well as teenage users moving ahead. Last year, we also acquired a company in the Middle East. And therefore, we will look to scaling up growth in the Middle Eastern region as well. We utilize or leverage that company to actually export our aligner products to KSA as well as UAE.
All right, Arpit, thanks very much for joining us here and sharing your thoughts with us. Pleasure speaking with you. Thank you.
Thank you so much.
And with that, it is a wrap on this edition of Startup Street. From Ritu and me, goodbye and many thanks for watching.